Good day, Forex traders. Victor's FX here. My name is Victor, and I've been trading for 3 years, 2 years now. I'm just finding profitability, and I'm trying to share the journey along with everybody. Now, in today's video and today's course, we're going to be teaching you smart money concepts from scratch. Yes, if you know nothing about the forex market, we're going to just get you started, and we're going to get you rolling into these forex markets here. So, hit the like button and subscribe before we carry on. Now, today we're just gonna go over a lot of overview. As you can see, we have a lot of things sketched out. We have intro to price, we've got the down market structure, we've got liquidity, and we've got accumulation. Now we're just gonna get right into it because I don't want to waste your time. Okay, so first of all is the introduction to price. Now if you're new to trading and you want to get a software that's gonna allow you to start trading, check out tradingview.com. Okay, I might leave a link in the description to TradingView. Just check that out. So tradingview.com is a chatting platform where you could just go to the website by just going on your browser and type in www.tradingview.com. Okay, now in case you hear me or you hear watery stuff in the audio from time to time, it's just me trying to stay hydrated by taking a little bit of caffeine into my body while making this presentation. Now this is the TradingView site. Okay, so you could just go ahead and search for any market you want to search for, and you could just get started by viewing the market. Okay, so we're just going to jump right into the trading stuff. Okay, so first of all, if you don't know what candlesticks are, you don't know what ticks are, you don't know what pips are, I'm not going to go to the extreme basics. We're just going to start from somewhere a lot of people can relate. I believe a lot of you have seen candles before, and you've heard about currencies. Now currencies is just a different currency used by different countries. For example, when you talk about euros, it's predominantly used in Europe or something like that. USD, which is the US dollar, is used in the United States of America, and so on. So when you're looking at a pair such as Euro USD, it's kind of depicting the euro compared against the dollar. Okay, once more, euro compared against the dollar. Now if we want to look at something like this, now imagine this market is going down this way, which is the indication by the red candles, the stale candles. Now I don't normally use red for my candles. I normally use black for sells, but for the sake of this video, I had to go back to the default, which everybody can easily understand, which is the red candles for selling. Okay, so these are red candles for selling. Now if this market does this, this simply implies that the base market, which is euro, is declining in price, or is devaluing, is getting lower in value as compared to the US dollar. And when this is going down, it automatically means that the dollar is climbing higher. Okay, when euro is declining in price here, it means the dollar is increasing in price, and vice versa. Okay, so when these green candles, let me clean out all of this so you don't get confused. Perfect. Now when these green candles are forming this way, okay, it implies that buying pressure is coming into the market, and that a lot of people are bullish. So it means euro here is bullish, and then it means that the USD is kind of bearish, going down. Okay, I just threw in something here, bullish. When something is bullish, it's going higher, and when something is bearish, it's going lower. So that's the basic introduction. For those of you that don't really know, it's not some kind of magical concept to wrap your head around. Now once in a while, I'm gonna go back to the board so we'll see what we have, so we don't miss what we are trying to explain. Now we've got an introduction into price. I explained to you how price, the meaning of these candles here on the Euro USD. Now you can see that we are on the monthly time frame, which means one single candle here takes one full month to complete. Sorry about that, guys. So this candle from here up until this place took 1 full month to complete. From here up until this zone took how many months? 1 full month to complete. Let me use a more interactive tool, which is like a trend line. Okay, so from here up until this high right here took 1 full month to complete. From here down here up until this high right here took 1 month to complete. Okay, so that is the time frames. Now price is dynamic and is expressed usually in time frames here in the market. So if I go to a lower time frame, remember we're on the monthly time frame, we can go down to weekly. How many weeks are in a month? I presume 4 weeks. You can see that now instead of the craziness. Now let's first of all go to the 1 month so I can do something for you guys to see. Now let's look at this first candle, this red candle here. Or let's take the first green candle so we don't get ourselves confused. If you take this first green candle and then you look at the high of that candle, and then we'll go to a 1 week time frame. Now you can see I went to 1 week by just typing it. 1W week. If we wanted to go for 1 month, 1M month, we'll go to the 1 month time frame. Now if we go to the 1 week time frame, you can see that we have what? 1, 2, 3, 4 candles here. So you can see how this is what price communicating to us. Now we could go down further by selecting the last red candle here, which is this one. Let's draw the low of that candle this way. Then let's draw the high of that candle this way. Now we could go down to the what? 1 week. We could go down to 1 day. How many days are in a week? I guess nobody is that dumb not to know. I'm not sorry about that. I didn't mean dumb, guys. Sorry. So I have one. I have about 1, 2, 3, 4, 5, 6. Okay, 1, 2, 3, 4, 5, 6, 7. So you can see 7 candles there. Let me get a little sip, guys. Refreshing. Now you can see 7 candles there, which is making a day. Sorry. So each candle there is a day. We could still go down further. Let's take the high of this lowest candle right here. Okay, then we'll delete every other thing. Remember we're in a day, right? Let's just go down to an hour. I hope we don't get lost because it's gonna be a lot. Let's just go to like 4 hours. So you know that there's like 3-4 hours in a day. Hope it's not that confusing. So yeah, same thing on repeat. So that's just the basic conclusion on what time frames. So time frames are just a way to interact with what price is doing. You can easily go down to lower time frames, but for the sake of this presentation, I'm just going to maintain the monthly time frame on Euro USD. Now you just understand that time frames are just what the time frames are fractal, and I'm going to get to that. This is just our first video, so I don't want to go too in depth. By the way, if you've listened up to this point, you're performing better than the 90% of traders, because everybody now has the attention span of a squirrel. You know, just 1 minute shorts on YouTube. Most people don't have their attention span to learn things these days. Now this course is totally for free, but don't underestimate the worth of the course, because I'm gonna be breaking down gems I've learned from hundreds of hours of price action delivery. So just a little nugget dropping there. So let's continue. I've explained price to you guys, the movement of price, especially on a currency pair. For example, we're talking about Euro USD. The same thing if you're looking at a different pair, maybe USD, JPY. JPY is for Japanese yen, or CAD is for Canadian dollar, GBP is for Great Britain pounds, CHF is for something. So there are a lot of variations for this. So don't just get stuck to one and be like, that's the be all and end all for the currency pairs. Now another thing we're gonna be looking at is what breaking the old age belief of support and resistance. Pardon me, guys, I'm not a native English speaker, so sometimes I might butcher some of these words. Now it was breaking the old age belief of support and resistance, trend line and indicators. Now I know a lot of traders, when you're just getting started and you're just trying to get your head around the trading journey, you might just get drawn into all this trend line stuff, get on into this support and resistance stuff. Now if I was to start learning afresh, I would have a faster journey by avoiding all of this trend line stuff, support and resistance stuff, and then all this traditional stuff that a lot of traders are told to get started with. Okay, my whiteboard is taking time to load. I don't know why this is taking so much time. Okay, we're finally loaded on it. Now this is what a lot of traders are starting to learn. Okay, some traders are just gonna be told we just have support and resistance in the market. Sell at support, buy at resistance, right? It's quite easy. Buy low, sell high, right? Wrong, noob. Sorry. So it's not just something that works in the market, and I'm going to explain why it doesn't work. I'm just doing this for a visualization for people that don't know about it. This is the resistance up here. This is support down here. You don't need to learn this. I'm just showing it for a lot of people. I don't say if it's your strategy and you're profitable with it, please stick to it. But the probability of you creating a profitable strategy from this is gonna be hard. I'm not saying there are not profitable traders. There are profitable traders making billions of dollars. But for a trader, to just get into a strategy like this, you need a lot of strict rules to get abided and a lot of moving parts. So we want to be less on the moving parts and much more concentrated. Now, other traders will break up the philosophy of what trend line. I'm going to show you why this is not really the best approach. Okay, trend line. This is a trend line. A lot of people say when it comes down to this trend line, you do what? You buy. Now, I'm gonna leave you to think if it's gonna work, but I strongly don't believe in this stuff. Really, I don't really believe in it too much. Same thing here. Price goes like makes a high, breaks lower. They're like, oh, this zone was a resistance zone. Let's just sell here blindly when we see a red pin bar. All of those crazy things. Okay, and then there are other traders who are doing supply and demand. This is not bad. I actually trade supply and demand somehow, not totally, but somehow we trade supply and demand. But there is a way to implement it into your trading strategy that you don't have to trade every single supply zone, every single demand zone. That's what makes it a strategy. If not, everybody knows supply and demand. Everybody should be making money in the market. Yeah, but that's not the case. And psychology is a huge part. But I want to believe that if you have sound technical analysis, your psychology will not be that hard to build. But even if you had a very, very good psychology and you're trading support and resistance, you might be fucked up along the way. Sorry for the vague language. Now, supply and demand is saying that prices leave what zones which price has to fulfill in order to what continue in a given direction. Okay, maybe giving imbalance or solve. I'm gonna explain all this stuff. Don't worry too much about it. This is on the supply zone. Yeah. Okay. This one is what supply zone. So price leaves zones here to what get mitigated to go higher. And then there are other traders who are overly concentrated on liquidity. They're just gonna draw something like this for you, and they're gonna tell you, oh, the best trading strategy is that strategy that is gonna incorporate all the whole liquidity. Take high liquidity, take low liquidity, take sideways liquidity, take medium liquidity, and so on. And at the end of the day, you just get over confused. Yeah, okay, so the way you have to do it is there are a lot of things you have to put into consideration before drawing every single zone and drawing this money sign and feeling so cool about it as thinking you're a good smart money trader. Now I know I've spilled a lot of things at you, so let's go into a little demonstration on our charts to see if our support and resistance actually works. Now I'm just going to go to the starting price and we're going to pretend we don't know what happened at the right hand side of this market. Okay, pretend. Yeah, I know a lot of you are gonna know what happens, but let's just pretend. Ah, nice stuff. Now this market was going high low, high low, high low, high low. A lot of people are gonna be like, uptrend. Nothing. I'm not gonna debate about it here. It's still on an uptrend. In my eyes, until it breaks this low down here, which it didn't. So now a lot of traders just formulate random things. You can still be profitable support and resistance, but some traders don't just know when to stop. They don't know when to quit. For example, this zone is a great resistance zone, right? It's a great resistance zone, not bad. So now a lot of traders, before price gets to that zone, what are they going to do? They are going to put their sell this way, waiting for market to give them what? A rejection. So they are looking to sell this market. Remember, we don't know what is happening in price, right? Yes, we don't know what's happening in price. So you can see, oh, it takes that high. Okay, what are we gonna do now? Oh, it takes that high, it takes that high. Price is bullish now. Let's draw a trend line. Okay. Okay. Let's shift it a little bit. I think we should buy here. Should buy here. Trend line stops below this demand zone. Okay, we're in a little bit of profit. Yes, profit. Oh shit! I got liquidated once more. Maybe this is the new. Oh, this is the new trend line. Yes, this is my new trend line. I need price to touch it. Oh, price comes to my trend line. Okay, bullish candle. We buy. Stop loss below this resistance zone. Profit, baby. Yes. some profits. Whoa, yes. Okay, this time around it actually works. So this trend line stuff works here, but then it's not every time it's gonna work out, and you might just end up over leveraging on your account before this finally works out. Okay, so at the same time, some traders are now looking at some crazy amount of things. Imagine now this market is in an uptrend, and they are trying to get involved on a buy. The first thing they are gonna do is they are gonna draw this trend line. Remember, we don't know what happened at the right hand side. Imagine you were waiting for the first touch here, second touch here, and you are buying on the third touch of this trend line to go higher. Stop loss below this zone here. Now see, market just took you out, and then what ran in your favor. Given that you still gave a lot of pips here, breathing room pips, you still got taken out. Okay, now you were waited. You're like, okay, no issue. This we draw our resistance level. This resistance level has been touched a lot of times. Okay, resistance, great. Resistance non support. Okay, you buy here. What happens? It goes into profit. Maybe you make money this time around. That's why I said if done properly, you can make money, guys. I'm not saying, and this way I'm analyzing it is even much more prettier, because a lot of traders are doing some stupider things like drawing this kind of trend line, drawing any single thing in the market, this zone here, a lot of craziness that it no longer is a system. It's just let's do anything we want to do on this market. Let's just draw any single line. And if you draw any single line across the market, something is going to happen at that zone. For example, this zone here. Yes, resistance turn, demand turned resistance. Sorry, support turned resistance, A lot of craziness. Okay, and in the long term, it's not going to be a system that's really defined on anything. This is just not impressive at all. Okay, so if you are coming from those kind of strategies, especially if you are trading on lower time frames, higher time frame might get away with it, but on lower time frame there are a lot of manipulations that could wreck you as a trader. So a lot of this trend line stuff does not really work. Okay, and sometimes you might see a trend line after the fact. So that's after the trend line has formed before you see it. Imagine you're looking at this perfect trend line, even on the weekly time frame. Price touches it, and then what? You can still see it still went deep against you. So you need to have a fundamental understanding of the market, how the market moves, instead of just what randomly buying and selling based off of trend lines and a lot of these things that traders fall victim for. Okay, so none of that buy low, sell high bullshit. It doesn't really work that much. But if you can create a system off of it, kudos to you. But personally, in this our trading career, what we've discovered by watching hundreds of hours of price and trading in the live market is that this approach is not really the most efficient. I'm not saying it's the worst approach, but it's not the most efficient approach if you want to be profitable in this market. Now we're going to be looking at the down market structure next. Now let's go to our trusty whiteboard, and then the down market structure just states what higher highs and what lower highs is what an uptrend, and then what lower highs and what lower low is a downtrend. I don't like how this thing is looking. Let's give it some thickness, baby. Yeah, so now if we go down this way, we want to get an uptrend. It's going to be something of this nature, and the downtrend is going to be something of this nature. Okay, so this is the lower high, higher high, higher low. Okay, see that lower high or higher low, anyone you want to call it. It's not too much on the name you call it, just the understanding. This is a higher high, and this is a higher low. H, higher high, higher low. So this is what lower high, lower low, lower high, lower low. I'm going to show you the same thing on Euro USD. Even though this is bullish, this is going to be the high, low, high, low, high, low, and most especially we're going to be looking for high. Okay, in the long term, without any magical thing, we know that Euro USD in due time or in many years might what get to this high due to the market structure that's showing. But can we trade based off of this Dow structure? We could try, but it's not the worst thing that have been introduced here. Now, that is just basically the Dow structure. The Dow structure is just noting that there is higher highs and higher lows in the market, and lower highs and lower lows to consist of a trend. Okay. Now this is dependent on the time frame, because if we go on a lower time frame, let me just delete all of this stuff we've done. If we go on a lower time frame, for example, let's say we were looking at this full leg down here. This full leg down here, we're looking at maybe a 1 minute time frame. Remember, this is the monthly. This is the monthly time frame, which means one candle is in a month. So on the 1 minute time frame, this stuff here will be very bearish. Even on the 1 hour time frame, this leg down here will be bearish for the 1 hour. So it won't really be bullish. But when you zoom out into the monthly, we'll say, oh, we are still in a bullish zone, bullish market. This is just gonna be a retracement in our eyes. And even all these moves that took a lot of years are gonna be retracements on the hourly time frame. Okay. So that's one way to look at the Dow structure, not too crazy. How price maintains structure. Now, price will maintain this structure until it breaks. For example, if we have high, low, high, low, high, and this market managed to break this low here, this should be seen as a break of structure. Okay, there's a lot of flaws to the Dow structure, not a lot, but a little bit of flaws, and the way you can tweak it to get more accuracy, because everybody knows this, and it's just anything that everybody knows in the market most times just doesn't work that much, doesn't work that effectively. So this is like the Dow structure, and Dow structure break is gonna be this. And if it was a downtrend, low, high, low, high, low, and it manages to break the previous high, this is a break of structure according to the Dow structure kind of teaching. So that's just basically what Dow structure means. If you don't know what it means, that is it. Now we're going to be looking at liquidity in the forex market. Now the majority of moves most traders play on, most of those things that a lot of traders already know. For example, trend lines, supply and demand, resistance, RSI and so on. RSI and so on. Those things are already kind of like known by the market, and they get manipulated quite easily. Okay, quite easily. For example, even when we already know what the trend is. For example, look at this push to the downside. Okay, now when this market was going higher, you can see high, low, high, low, high, low, high, right? There are a lot of zones here that people just want to just buy off of. For example, some people just want to buy off of this zone for no good reason. They just want to buy off of this zone. Our trend line kids have seen this trend line here. Remember, in hindsight, let's say we haven't seen anything here. In hindsight, when this is rejecting, this is the second touch, right? We want to buy off of the third touch. This way, protect below, somewhere below it. Yeah. What happens? Okay, surprise, surprise. Price goes below it. Why does price go below this zone? Because there's a lot of liquidity. There are a lot of people trying to buy this market. So the market goes against them. So all this whole thing that the market has been doing, the market has been engineering liquidity in order to take out a lot of what? Early buyers. The market has been engineering liquidity to take out what? The early buyers. Those people that are less informed. The market just what? Does it. Now go to the charts. Sometimes just go to the charts blindly. Look for just look for your higher highs and higher lows. This is a practice that could make you better, that could give you better insights in the market. Just draw your higher highs and higher lows and watch what market does. Draw a zone. Just draw any zone out that you feel the market should reverse from. Any zone you feel right now the market should reverse from. Draw that zone and watch what market does. Okay? I would assure you that 60%, 70% of the time, even if the market is gonna reject that zone, it's gonna dance around, play around, take you out before going in your direction. Okay, so that's one thing I've noticed, and that's one thing I managed to implement in my strategy, that I don't really just buy. I don't just sell without manipulations. So this, I actually have a video on liquidity already. I don't want to go too in depth on liquidity, but it's just basically where there's money to be taken from the market. Okay, for example, in this bullish market, when price did this high and pulled back, there's a lot of liquidity at this high, because a lot of sellers, let's use a trend line at this high here, right here, because a lot of sellers are looking towards sell this market to a billion zones down. So when this market starts going high, they are still piling in sales. They want it to go down, it goes high, they are still piling in sales. It goes high, they are still piling in sales, and at the end of the day, it takes everybody's money and what, liquidates everybody. So just know that when the market is moving, it just likes taking people's money. For example, Euro USD, we're predicting Euro USD to be bullish. A lot of people have been selling. And what has the market been doing? It will give them some important thing, looking at, oh, we want to sell, and poof, it takes everybody out. Start going, they'll be like, there's no way this motherfucker is gonna go higher than this. Poof, it's gonna go high. So where those people are just placing their money without any concern and without understanding, that's where the market just loves going. The market just loves it. It loves taking people's money. That's the reason the market is existing. If it doesn't take anybody's money, the market is just gonna close. Okay, it's just in it. Right? The market is always in a random give and take kind of scenario. So it's always taking people's money. Now, that's just liquidity. Liquidity. Watch my video on liquidity, okay? So this is actually the first structural video that I'm making, which allows a lot of traders to be able to get started and get in touch with like what I'm teaching, because I normally just do weekly outlooks, but I've not really gone in depth like this. So yeah. Also, liquidity can be in form of demand zones, but you can see this zone here: support, turn, resistance, turn, support, turn, resistance. You can see the market doing as if it's going in their favor and goes against them. You can see another resistance zone here, very clear resistance zone. Touch, touch, touch. On the third touch, you should buy. Watch what the market does here. It gives them a bullish confirmation here, and what happens? It goes against them full time, taking everybody's money, and when the market does that, it now gives a very huge move. So when it takes a lot of both money, it makes a huge move. So that's basically what liquidity means. Just when money is in the market and the market manipulating people out of those zones. So um market uses makes the market maker use liquidity to gather less informed traders money. Yeah, I just explained that. How to implement liquidity in your strategy. Now, you don't just go everywhere looking for highs to be taken, trend lines to be taken, blah 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 blah. Now, if you are looking for example, if you are trading this high, low, and you see this market doing this way, engineering liquidity going low, but you know you are overall bullish because of this break. Until this market breaks below this zone, you know you are bullish. So you should be looking for a lot of things to happen to the sellers, bad things to happen to those sellers. Sorry to say, guys, trading view is just it's making me angry now. This was where we were. We talked about this market going high, low, creating a new high, break of structure. I would not expect price to go below this low. So we have liquidity above this zone here. So it's potentially gonna make our new higher high, since we know where price is heading. Now, this aggressive selling here is coming in, and this might have been going on for plenty months. It might have been going on for plenty months. Watch more liquidity is happening. Trend line here. We've got a trend line. First touch, second touch. Okay, we sell here. Hoo. Profit, baby. Bruh. Oh shit. I got liquidated. That will happen, bro. So you can see it takes liquidity, not necessarily a bullish break. So this place, it traps a lot of sellers. A lot of people money was lost here, guys. So here the sellers, money was lost. Some people were trying to buy the breakout of this trend line. Money was still what? Lost. And you can see when after that the market just went down. It did not stress again. It just took their money and what? it went down. That's just how the market moves. Same thing here. Trend line. Okay, see, break of that trend line, break once more, and now a lot of people are still looking. Okay, resistance, turn support. We sell right here. Yes. What happens? Market goes higher. So if you are looking to buy, you should be looking for the manipulation of the sellers, and then the break of structures to the upside. That's how you get into good trends. And that's how we've been able to predict moves for the past 3 months on this channel live every Sunday. So it's not something of hindsight. Yeah. So that's how you can implement it. This is obviously not a full in-depth, but this is just an introduction for people who are trying to learn the smart money way instead of just randomly doing whatever the fuck they feel like. Now the final now this video is not gonna be over concentrated on entries, okay? Because I want the shift to be in your mind first of all. I don't want the shift to be in the way you are in the way you enter trades. I'm not trying to teach you where to enter right now. Okay, we're gonna do that. But first of all, you need to know the basics. Because without the basics, you just don't have a good understanding of how the market moves. Okay. So personally, I love to implement a lot of accumulation and distribution in my trading. I'm not a wyckoff trader. Don't get me wrong. I'm not doing all those um, ARST, Spring, all of those crazy stuff. We just want to understand basically what is accumulation, what is distribution. We don't have to overcomplicate it. I always say that analysis is not the number one thing for you to be profitable in this market. It is what? First of all, your psychology, and you have to have a good strategy. First, the good strategy, psychology play along. So it's not about overcomplicating it and having 100 RSI with MACD and Bollinger Bands to make money in this forex market. Yeah. So we're going to be looking at accumulation, distribution, a basic explanation. Now, when we want to explain anything about accumulation, let's go to a new zone. Accumulation is when the market what? For example, this market is already bullish. Why is this thing getting thinner and thinner? Am I getting blind? What the fuck? I don't really fucking understand. What's this? I don't even get it. Imagine the market has been bullish. This is getting thinner in my eyes, guys. I don't fucking know what's wrong with this marker. This is very thin. I hope this video comes. Maybe I'll use paint. I'm sorry, guys. Just open up paint. This is getting me annoyed. Okay, now we have paint. I hope the brush. Believe me, I'm trying my best. Okay, for example, we are in a bullish market, just as USD was in, and then this pullback on a lower time frame, we're having what? Bearishness coming in. A lot of people are already enjoying the money from the bearish price action. Maybe it liquidates the high as seen before, continuous bearish, and then before it comes into this zone here, which is the zone we don't want price to go below. If not, there will be a shift in market trend. I should be looking for what? A reversal. Now, see, when the market gets into that zone, I will start to see the market going lower, going high like this zone, maybe even going lower once more, breaking under low, and then going high, something of this nature. Okay, we might go ahead and call this what? An accumulation, because what was it doing? It's manipulating lows. Okay, manipulating lows. People are thinking, oh, this is the final low. It goes high, they'll be like, oh, buy, sell. It goes down, they're like, oh no. Goes high, breaks once more. Now a lot of sellers are just selling. It's taking the money from the sellers. Can you see that? Taking money from the sellers this way. So it manipulates lows, and also from the buyers, because some people will just want to buy this market. Here, maybe they buy here, it takes them out. Okay, they buy here, it goes in profit, takes them out. So the buyers are already tired. When the buyers get tired and then they finally break the structure, this market might just pull back a little bit, start going in the direction of the market intended to go. And there are a lot of examples about this, a lot of examples, I can't even show everything here. Hope this has been recording, because if it hasn't been recording, then I'm actually fucked. Now guys, that is basically accumulation, manipulation of lows, break of structure to the upside, and then what? Continuation. And then the opposite is distribution. Maybe a market is going low. Now mind you, don't look for an accumulation in a bearish market. Look for it in what? So don't look for accumulation this way in a bearish market, because it's more likely to turn into what? A distribution. Okay, more likely to do that. Now imagine we're in a bearish market, we'll have to look for distribution. Imagine price is coming back to the zone here, which is our protected high. We don't want price to come above this zone, else it's going to be what? A break of structure and continuation. So once price starts approaching that zone, maybe the zone is this way, and the price starts becoming bullish in the lower time frame, all you have to do is what? Wait. This alone can be a system for you. All you have to do is what? Wait for price action to come back into the zone this way. Then wait for somehow. It's not going to be perfect like this. It's not always going to be perfect. The delivery is always not perfect, so it's not about how it delivers. Maybe price breaks this low, maybe it takes the high once more, now breaks down lower, then breaks down lower. Now it has taken care of a lot of people buying early. Early buyers lost a lot of money here, lost money. And then what? Right here is showing you a break of structure to the downside, and then you can finally what? Take your sell right here, and price most of the time is going to respect that and give you a lot of profit. So that's how to go about it. This here is distribution in the market. This here is accumulation in the market. And I won't be teaching what I don't trade. This is exactly the model I mostly trade these days, because I find it much more efficient for me to trade this. Okay, so we're gonna go in the live markets to try to see which zone we saw an accumulation from. Let's just look at this zone on Euro USD. You can see the price action. It broke this high. Why is this one here not an accumulation? This zone here, the price went higher. Now see, the price went low, high, low, high, low. Actually broke structure a little bit, but then there was no confirmation, so price just blew to the downside. And I see low, high, low, high, low. See, it was failing to make lower lows. It was failing to make lower lows on these zones. Let me see if there's a tool that I could better use. Yeah, this tool looks much more fantastic. Low, high, low, high, low, high, low. Failing to make high, low once more. Break of structure, breaking all the structure. Low, high once more. You don't have to rush anything. At this point, I am now bullish in the market. You don't have to rush. You don't have to be in a rush to take a trade. Obviously, it's a monthly time frame. I won't be trading monthly time frame, but it's the same thing you're gonna do if you're trading a lower time frame. At this point now, I'll be looking for zones to enter the market. Look at this low here. Now we'll be looking for what? How to enter this market to the upside after all those zones. You then know that okay, this is a confirmed accumulation. Why? Because it took liquidity. All the people trying to buy, it took them out plenty of times. 1, 2, and then what? Started going higher. Which at this point, a lot of people are now looking to sell the market. They are now looking to sell the market. They are looking for any single reason. Any single reason to start selling the market. And yeah, as you can see, at the end of the day, they are not smiling home. They are just like, okay, lost a lot of money. And then for distribution, it can be on a higher scale. Okay, for example, let's delete all of this way. Let's take out our tool. Where's our crazy tool? Guys, these days I don't know if I'm getting old or something. Yeah. Now this was this high, low, high, low, high this way, low. You can see the market failing to make new high, low, high, failing to make new high, low, high, low, which finally broke structure. So it took care of a lot of people selling here, takes them out, selling here, scares them to close, selling here, just keep manipulating up until it breaks structure, and then we can confirm that this zone right here is what? A distribution zone. This zone right here is what? Accumulation zone. You can go on your chart and box up things like this, keep marking them out with the same explanation I gave you. Obviously, I'm going to make a more in-depth video on accumulation and distribution. This is just a starter's pack to get your head around what you need to learn to become profitable. Okay, it's not all about memorizing chart patterns, knowing all those liquidity stuff that they post on Instagram. It's not going to help you. You need to look price for what it is and learn from it. I know it's a monthly time frame, but I told you guys price is fractal. You can easily do the same thing on the hourly time frame. I personally trade a 1 minute time frame, so you should also be able to execute this on the 1 minute time frame. Now, yeah, this is what a distribution right here. Okay, yeah. So let me go back to my board. Yeah, how to implement market structure and Dow and accumulation. That's just exactly what I just showed you guys here, which is what waiting for what price to be in a bullish. Now this is a bullish price action, which is why we are looking for what accumulation. So on a normal day we shouldn't even be looking for this distribution, but if it presents itself, it's not bad since it's the monthly time frame. But now you can see price didn't even pull back to this last zone where a lot of people are looking to sell. It just accumulated here and what went higher. And if you understood accumulation and distribution, you would have been able to get into start buying instead of a lot of people are now looking to what? Let's sell to this zone. Let's sell to this zone. Let's sell to this demand zone, to this resistance support zone, wherever. Okay, so the accumulation. If you want more videos on accumulation, just type it in the description. Basically, this is it, guys. Real market shift, secret to knowing market reversal. Yeah, so I'm gonna give you the secret sauce to knowing market reversal. Now for this, I'm just gonna go to the 1 hour time frame. 1H time frame. Okay, let's refresh it this way. Now for you to know market shift, I know this is we have been doing it on USD. Let's just go to a pair, maybe XAU, or let's just go to GBP AUD. Yeah, just open that pair, random pair from nowhere, guys. Now I'm just gonna do something that we will be able to. Let's just do this way. You see the chart disappears, right? Let's go this way. We just scroll back. I don't want to see what happens, and then I'm just gonna fuck. Okay, I'm just gonna click this way. Remember, we don't know what happened on the right hand side of this market, right? We don't know what happened on the right hand side of this market. Now, if I can tell you what I'm seeing on this market, I don't want to go to the higher time frame. Okay, higher time frame will be a different trend. I can see there's a break of structure down here. The market dips below, goes down 2 times. Okay, maybe comes back up here. You can see manipulation of highs, break of structure. It came back here to mitigate, and then what? Went lower. And once it went lower, it's showing a lot of people that we are now in the selling market. Market comes back up here, takes forever to range, and then finally drops. But as the market is dropping, I'm going to go slowly. As the market is dropping, it fails to break this low here. You can see the low is kind of holding. This low is what? Holding. So at the same time, you can still look at what? This zone as a what? Reaccumulation instead of a distribution, because at the same time, the market is not what? Oh, sorry guys. The market is failing to break this what? Low. Okay, even if it's on this little time frame up here, it looks like a distribution. Consider this as what? Manipulation of low. Manipulation of low and what? Break of structure. So this zone here, if it's holding, it might be that this price action is what? It's kind of like an accumulation instead of what? A distribution. And as a result of that, you can see the previous price action here. It has been going lower, but as a result of that, this zone starts holding. So more likely than not, this price action might be what? A reaccumulation to take price what? Higher above all these zones, which have prone to be a lot of liquidity resting above the market. Okay. At the same time, you can see coming back into the zone, there's another smaller reaccumulation going on here, which is what? The market dips below, takes a lot of buyers out, dips below once more, takes a lot of buyers out, break structure, comes back to what? Mitigate it before going higher. So more chances than not, the price action is just fuck. This place is now messed up. I'm trying to clean it up and it's not just allowing me. So I'm just gonna delete this way. So we just see if price takes this high, Control T takes this high this way. So you see it dips below, dips below, dips below, dips below, and yeah, so you can see what I was talking about. It's just about what? Knowing the side of price action that you are in. This zone here was not taken out earlier, but at the same time, it didn't invalidate this high. So if you had invalidated this high, this would have been a confirmation for us to start going what? Higher than this price action. But at the same time, a reaccumulation happened here, which proves price what? Significantly what? Lower. And you can see what? Price just continues respecting these zones. You can see trend line manipulations this way, going higher, breaking down, mitigation, which is what? A redistribution, price going lower, and then what? Here, right here, you can see the sharp drop in the market, sharp drop, this zone formed, it broke it impulsively, okay, showing that there is kind of a bullish presence in this market. And if we want to draw out our zones, it will be this last zone here. I don't want to go too forward so you don't see what the market does. And then you can see the zones, this zone up here. You can also buy from these zones by confirming and so on. So the market, I told you guys, the market will most likely become very bullish. And then you can see they move away from that zone to the upside based on what? Accumulation principles, liquidation of lows, break to the top side, and confirmations. And just by seeing something like that, you would have seen the massive push to the upside, a lot of pips, thousands of pips to the upside that this was able to generate. Before market did any other thing. Okay, same concept here. So you just need to go back in time, look at what the market has done previously, know if it's an accumulation, if it's a distribution on different time frames, and that's a better way to think about the market. Also, try to incorporate your findings with market structure. Don't just go crazy on it. Look at market structure. We're just looking at this on the 1 hour time frame, not going higher to know our general trend, like going maybe to the daily. Okay, so if we're looking to trade 1 minute, there's no need going to a very high time frame to kind of analyze the chart. You can go to the 1 hour time frame, analyze, go to your 1 minute time frame and trade. But these are just advanced principles. This is just a tip of the iceberg of what you'll be learning if you subscribe to the channel. And we're going to be releasing part 2 of this video. Don't feel too bad about the delivery of today. This is my first time kind of doing something like this and trying to be serious about it, because I've just been spewing knowledge at you guys randomly, and this is just like the first organized video I've done on this channel. So hopefully this was a helpful one. Be able to stick to the end, it means this video was a bit helpful to you. So smash the like and subscribe button, and I would love to see you guys in the next video. I love you guys, and stay healthy, stay safe, and trade great. Thank you for listening to me. Signing out now, guys. Love you.